Hey, it's Mark Ferguson with Invest for More, and welcome to another one of our real estate investing videos. Today we're talking about the housing market and a possible housing crash in 2021. Now, there have been a lot of videos coming out about a possible housing crash, and I wanted to give my take on what I think will happen. But just remember, nobody knows for sure what's going to happen, if there will be a crash or not. And it's all kind of a guessing game at this point. There's just so many variables going into the real estate market and what could or could not happen. So now my viewpoint might be a little different than some others out there. I keep seeing the same thing. We're having a crash is imminent. It's going to be the worst one ever. And I don't feel the same way as some of those other people. I'm going to go over all of that. Now, first, if you don't know me, if you haven't been on my channel, why should you listen to me? Well, I have been a broker, investor, agent, author since before, during, and after the last housing crash. I got started in real estate in 2002. My dad was a real estate agent in 1978 until just recently. So I've been around real estate a lot. I invested, I worked as an agent before the last crash, where we built up during the crash, and my county here in Colorado led the nation in foreclosures for a while, and then after the crash. And I sold a lot of those foreclosures after the crash as well, as an agent, and then I'm also an investor. So I think we sold literally thousands of homes as an agent. I sold a lot of foreclosures, HUD homes. I own 182,000 square feet of rental properties right now. We've flipped 202 houses over the year, so we've done a lot with real estate. And as far as the housing crash goes, there's a lot I want to talk about. I'm going to show you some data, some numbers, but some of the main factors we're going to talk about, some of the main things to consider are new construction builds, right? How is that affecting the current inventory? How is that affecting the housing market? How did that affect the last crash? How many crashes have there been in the United States, right? A lot of people think the housing market just crashes every 10 or 20 years, but is that really the case? And I'll give you a hint, it's not. So we're going to talk about the last housing crashes, when those actually happened and how bad they were. And we're going to talk about affordability, which is a big thing, right? People are saying, hey, houses aren't affordable now. Look at the past U.S. housing price index and how unaffordable houses are now compared to then. But something a lot of these people aren't considering is comparing affordability to other countries, right? Maybe housing isn't quite as affordable as it was in the U.S. a few years ago, but remember, that was the most affordable time in the history of the U.S. after the last crash. But there are still many, many other countries with much less affordable housing than the U.S., and they have not had crashes. So we're going to talk about that, and we're going to talk about supply and demand. That's a big thing. We're going to talk about lending. Is lending getting looser? Is it stricter? What's it like compared to what it was pre-crash? And then we're going to talk about a few other things too, like my predictions from before. I did a video in 2017 about the housing crash, because people were predicting back then a housing crash. In fact, people were predicting in 16, 15, 14, 13, 12, 11, 10. They were predicting a housing crash every single year. Even before the last housing crash was over, people were predicting another worse, like double dip housing crash that never happened. So we'll talk about that too, in the history of predicting housing crashes. And all of this we're going to bring together and give you my opinion on why I really don't think there will be a housing crash anytime soon, especially in 2021, because we're going to talk about foreclosures and how those work too, and how long it takes to have a foreclosure. And even with COVID and all these people behind on payments and evictions, that doesn't necessarily mean there's going to be a housing crash anytime soon. So we'll talk about that too. So there's a lot of information we're going to pack into this. I'll try not to drag it out to an hours long video. Don't worry, it won't be. But there's a lot I want to talk about, and a lot that goes into the housing market. So we'll get started here very soon. Of course, remember to check out investformore.com, my blog with hundreds of articles I've written on real estate, from flipping, being an agent, wholesaling, rentals, taxes, all kinds of advice there. And I've got 9 books on Amazon that we've written if you want more in-depth information on real estate and learning how to actually invest. And of course, we appreciate the likes and comments, so keep those coming here too. The first thing I want to talk about is, who are you listening to when thinking about a housing crash, a potential housing crash, and whether one will happen? Now, there's a lot of really good people out there, right? A lot of really good investors, a lot of really good creators, a lot of really good YouTubers, podcasters who are truly trying to say what they think will happen, right? Not everyone's bad, but there are some people out there too who are trying to capitalize on a potential housing crash. I see it all the time where products are coming out, coaching products, books, videos, and they're all trying to capitalize on a potential housing crash and get your attention and market themselves based on a housing crash and how you can avoid it or avoid these huge mistakes or not lose millions of dollars. So a lot of these people, now not all of them, like I said, are doing this to try and sell you stuff. They're trying to sell books, which is no problem. Hey, I sell books, I sell coaching programs, but sometimes they get a false pretense as to why they really say the things they do. They might not really believe it will be as bad as it is, or they haven't really done the research. They're just trying to market themselves and sell themselves. So be very careful about who you listen to as far as a housing crash. One example would be, I said it before in the intro, for the last 25 years, there have been gold and silver guys predicting a housing crash every single year because they're trying to sell gold and silver to people. Say, sell your houses, get out of it, invest in gold and silver. Well, they're like, hey, I predicted the last housing crash. Well, they predicted a housing crash every year for the last 25 years. So eventually they're going to be right. Well, actually, they were kind of lucky based on the data we'll see later on how often housing crashes happen. But they were right one year. But all the other years, they weren't quite so right. So those guys keep predicting housing crashes, literally every single year. And you can see the videos in their YouTube channels to see it over and over again. So make sure you're listening to the right people when you're determining, hey, is there really going to be a housing crash? Is this good information? And the very first data set I'm going to get into is new builds, new construction. Now I'm going to show you some data from the St. Louis Fed, which is an amazing website with tons of data, has data on housing starts, price indexes, rents, all kinds of great data. So we're going to show you these charts and show you why new construction is so important to consider when we're talking about housing crisis, housing crashes, housing prices. So we will switch over here and show you exactly what I'm talking about. Now, I'm looking at my screen, but hopefully you're looking at a different screen now if we did this right. Okay, so over the years, this chart goes back to 1959. There have been some up and down with builds, right? Had some big jumps in 72, followed by a big crash. Not a big crash, but a pretty big dip. Another pretty big jump. Another pretty big dip in the late 70s, early 80s. Then kind of another big jump. Some downward dips, nothing crazy. And then we had this continued 15 year slow rise in new construction until we got to a peak. So there wasn't this up and down that we see in the past. It just kept climbing and climbing and climbing, and then we saw the bottom drop out of it. Now this, of course, coincides with the housing crash, and this is one of the most important factors to consider when talking about housing prices in the potential future market, because I think this has more to do with housing crashes than anything else is new construction. New construction helps determine what prices will be, right? If you can build new houses for $200,000 and you can build 100 of them, right? That's going to keep your market, your median price, pretty close to $200,000, because if prices get too high, they just build more houses. It's profitable for the builders. They build, build, build. But if new construction prices rise to $300,000 or $400,000, but the market's stuck at $200,000, right? They're not building anymore. They're going to stop building because it's not profitable. So if more people move to that area, if more people want to buy houses, prices go up. That's what happens, right? There's not enough houses, there's not enough inventory. So if you want to buy a house, prices keep going up until eventually they hit that kind of balance point where new construction is profitable again for builders. And once it's profitable again, then the builders start building again and you have more inventory, the market balances itself out. So we had a big building jump for 15 years without any real downturn. So that caused a huge, massive, overinflated supply of houses. And that, coupled with the crazy lending guidelines, which we'll get into later, caused the housing markets to crash. Yes, Wall Street had something to do with it. Yes, foreclosures had something to do with it. But those foreclosures happened because the lending guidelines were bad and because there were so many houses. There were too many houses for people to buy. So what happened is we had this massive crash, much larger than the last 50 years, as you can see, as far as housing starts. And it stayed at record lows from 2009 to 2012, right there. 3 years, we had record low building that wasn't even close to the bottoms from the last 50 years. So they were building almost no homes. Now the average is probably around 1,400 at this point. Look at this. Keep going, keep going, keep going, keep going. boom. In 2020, we finally get back to the average amount of houses being built. So it took over 10 years for them to start building an average amount of houses. Not an oversupply, not too many houses, just average. And then for a short period, we bumped up, and then COVID hit, dropped back down again, and then we're kind of back to average again here, maybe slightly above average. So this is why prices keep going up. There aren't enough houses. There are not enough houses for the people out there who want to buy houses, because since 2007-ish, 13 years we've had below average building, and for much of that, record below average building. There are not enough houses. So in my opinion, for us to have a housing crash, we have to have enough houses for there to be an oversupply of properties on the market. Right now, there's not. There's not enough houses. We have to climb back up again in new construction. And I don't know if that will ever happen, because of the current lending guidelines make it very hard to build new houses. Banks are scared to build new houses. They don't want to see another crash. Other financiers are scared to build new houses. So you see small building projects, trickling amounts of houses coming out to the market, not big developments, not the massive building we saw back here. And because of that, I just don't see the mass of vacant properties that were in Arizona, Las Vegas, Florida, here in Colorado, where they just built so many houses and then all of a sudden people couldn't buy them, that they sat on the market. There just aren't those new construction houses available. The next thing I want to talk about is housing affordability. I hear it over and over again about how unaffordable the United States housing market is, and most of the time people are comparing housing prices now to what they were after the crash. Now, it's very important to know that after the last housing crash, housing prices were the most affordable in the United States since the history of the United States. They were so affordable. It's incredibly cheap to buy a house. That is not the baseline we should be basing off affordability. And what we're going to do now is take a look at the affordability of the United States housing prices compared to other countries, because that's what's really important. They can tell us, hey, is there a point where houses get too unaffordable? They start crashing, the markets crash, what happens? So what we're going to do is we're going to look at Financial Samurai, which is a really cool website. I used to guest blog on there. Sam is a really cool guy. And we're going to take a look at an article he wrote a few years ago. But it's a really good article, and it shows us what we want to know about affordability. Why is United States property so cheap compared to the rest of the world? And he has this really, really cool chart right here that shows us the housing price affordability in other countries. And so right here's Germany. That's basically the only other country that has had lower prices than the US. They don't now this ends in 17, but the price trends pretty much continue on the same trajectory. And you can see this red line here, that's the United States, up, 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 downturn, boom, crash, up, 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 up. So housing prices are not unaffordable in the United States compared to all these other countries. We have Australia, the United Kingdom, Sweden, Canada, New Zealand. All of them are much, much higher than the US. And this is New Zealand. Prices are twice as high there as in the United States. So the United States does not have a housing affordability problem compared to other countries in the world. And these other countries are not seeing their real estate markets crash. They never hit a ceiling where it's like, oh, prices can't go up anymore. They just kept climbing. People figured out how to buy houses. Maybe it's because interest rates are so low, but they kept buying, and it did not stop them just because prices got to a certain point. The next thing I want to talk about are lending guidelines. So have lending guidelines gotten looser? Are they stricter? What was it like before the crash? So I keep seeing a lot of posts on Facebook where someone says, they're doing subprime mortgages again. And like, oh, here we go again, the crash is coming. But is that really the case? Are lending guidelines being less strict? Because I remember before the last housing crash, there was crazy lending going on. People were getting 120% loan to value loans, which means they bought a house for $100,000 and they got a loan for $120,000 and walked away with cash from the closing. These weren't flip loans. These weren't loans to do repairs, simply a regular loan. Investors were getting 4 or 5 loans with no money down to buy investment properties. You can't do that today. It's virtually impossible, at least with traditional banks. So let's look at a different website I have here and see if things are much worse or better than they were before. All right, so here we are, and we're looking at the Urban Institute Housing Finance Policy Center. And they have all these cool charts that show us the Housing Credit Availability Index, which means how much risk are the lenders willing to take. And so this chart here kind of shows from 99 to 2007, they figured this was reasonable risk for lending products, and this was not reasonable. So you can see things got a little crazy there, and up to here, right before the crash, they got really crazy. Then all of a sudden it dropped well below what they thought reasonable risk was, and it stayed that way all the way to 2020, and look at this, it's still dropping. Lending guidelines have not loosened up. It is not much easier to get a loan. It's actually much, much, much harder to get a loan than before the crash, and even after the first part of the crash. This is, in the middle of the crash, and it's still harder to get a loan than right after that. And you can drop down and see some other charts they have with different types of loans, and it's all the same picture. Lending guidelines are not less strict now. They're actually much more strict. It's tougher to get loans. Investors are putting more money down. Owner-occupants have a tougher time getting loans. There is not that massive credit risk that there was before the last crash. And that, coupled with overbuilding, is what, in my opinion, were the two biggest factors of causing the last crash. All right, the next thing we're going to look at real quick is, are housing prices even that high in the United States historically? Right? Prices keep going up. People say they're too unaffordable. But of course, prices will go up. Over history, prices will always go up due to inflation. There'll be ups and downs, but they always go up. So are they actually too high? Or what is too high? Well, let's look at the Fred website again. So this is a really cool chart on real residential property prices for the United States. And down here it says the series is deflated using CPI. That means they adjusted for inflation. So we can go back to 71 and see kind of what prices were. And as you can see, there was a big jump right here in 2005, right? That's kind of the peak. A huge crash down there. And you can see just massive crash, biggest by far in the last, 50 years. So, right, I will talk about this here soon. But big crash, back up. Look, right? There's nothing crazy going on here. We're lower than 2005. We're lower than 1986. We're lower than 1977. We're lower than 1973. The housing market right now is not nearly as crazy and overpriced as many people say it is. All right, the next thing we're going to look at real quick are the history of housing crashes. So a lot of people think there's just going to be another housing crash because prices went up. But do housing crashes happen that often? Right? When was the last time you heard of a housing crash except in 2008? Probably you haven't, right? A lot of people say, oh, the Great Depression had a housing crash, and it did. But guess what? The Great Depression housing crash was not as bad as the 2008 crisis. So people saying it's going to be worse than 2008, it's going to be crazy, it's going to be bedlam in the streets. It's never been as bad as 2008, yet they're assuming it's going to get even worse, and it just doesn't happen historically. So we're going to look at what other housing crashes there have been, and let me tell you, not very many. So right now, we're looking at a website, was it Silver, right? Don't know what that site is, but they've got some really good information on housing crashes. And here we have the timeline of major housing crashes in the U.S. The Panic of 1837, the 1873 stock market crisis, the 1929 Wall Street crash, the Great Depression of the 30s and 40s. Now, these are kind of lumped together. They're basically the same thing. And then we have the 2008 housing bubble. Literally, there have been 4 housing crashes in the history of the United States, right? And 2008 was probably the worst one. So it is not like these housing crashes just happen every 10 or 20 years, or every time housing prices get high, the market crashes. That is not what happens. It takes a significant, crazy, unbelievable circumstance to create a housing crash, like the Wall Street crash, the stock market crisis of 1873. If you don't remember that, then that was crazy. The Panic of 1837 was crazy too. But no, the housing bubble was not something that happens all the time just because prices get high. It was a crazy just mash of circumstances of bad lending, overbuilding, foreclosures. It all came together in the perfect storm, and that is not likely to happen anytime in our near future. Another thing I want to talk about are foreclosures, defaults, evictions. So this is another thing a lot of people are saying, hey, there's a record number of foreclosures. There'll be all these defaults, there'll be all these evictions, there'll be millions of houses flooding the market, and this will cause a crash. Now, they're correct when they say there are tons and tons in record number of people behind on rent, behind on payments, but we're also in a crazy situation with coronavirus where we've never seen something like this before. And could that cause a crash? Maybe, but there's a lot of things we have to consider, especially with the timing. So people are saying, hey, this has to happen in 2021 because all of these defaults and foreclosures right now. But have they been through foreclosures before? Do they know how long it takes for this process to happen? It is not a fast, quick, easy process to go through foreclosure. So the first thing to consider is, yes, lots of people are behind, but lots of people are forced not to work right now. I think a lot of banks, the government, a lot of lenders are going to work with borrowers to help them catch back up. They don't want a bunch of foreclosures. Banks and lenders figured out during the last crash that when they foreclose all at once and dump all these properties at once on the market, it chops their legs out from under them, right? They just drop the value of all these assets they're foreclosing on by doing that. And we saw at the end of the last crash, they stopped just dumping properties on the market. They wouldn't foreclose right away. They try to do short sales. They try forbearance. They try loan modifications. They do everything they could to avoid foreclosure. And the government pressured banks to do that as well, right? I was listing these houses. I was talking to borrowers. I was helping people sign loan modifications. I was helping them do short sales. I was also listing foreclosures. So I saw this whole process, and you could see the massive slowdown in foreclosures at the end of the housing crisis. And another thing that happened is these banks had these foreclosures because of these government restrictions and the pressure not to foreclose. A lot of times they sold these assets. They didn't keep them in-house and sell them. They sold packages of tens of thousands of properties. Even HUD, a government entity, was selling packages of tens of thousands of properties to massive hedge funds. And these hedge funds are investors. They want to make money, right? They're not buying these properties to go dump them on the market and destroy the market. They were rehabbing them, renting them, keeping them, and honestly, they helped bring the market back by doing this. And so if there is a record amount of foreclosures, if there are a ton of defaults, that doesn't mean the market's going to crash, right? Those defaults were coupled with crazy building before, which we don't have, and even with crazy defaults at the end of the last crash, the borrowers, the lenders, the government learned that's not a good thing to dump everything at once. Plus, we have these institutional buyers who will step in and buy properties. There's millions of investors just waiting to buy discounted properties. Look on every Facebook page about a housing crash. Be like, oh, I'm saving my cash. I'm waiting for the discounted properties. That wasn't there in the last crash. So there's kind of this bottom net that will catch the housing market if it starts to decline, where people are just going to swoop in and start buying stuff. Now, will that happen right away? Will it take some time? Who knows? But I do not see a massive crash happening in 2020 or 2021. And we'll look at some of that data here too. So the chances of all these foreclosures just happening at once are very small. Now it could happen. Maybe the government will decide, hey, we don't care anymore, just foreclose on everybody. Although based on the reaction so far to the pandemic, I'm guessing they'll do everything they can to delay those foreclosures, not let banks foreclose, and try and throw money at the situation, but we'll see how that works. But let's say it does happen. There's foreclosures everywhere. How will that affect the market? Again, we're going to go to a website with some data. So this website is Atom Data Solutions, which has some amazing data. I did another video about how much the average profit is on a flip, and they provide some data there. Very good website. So this has the top 10 states with the longest foreclosure timeline. So let's say all these foreclosures happen. How long will it actually take for these foreclosures to go through? The average day for a foreclosure in 2019 in Indiana is 1,633 days. That's 4.5 years. In Hawaii, 1,600 days, Nevada, 1,500 days, New Jersey, 1,100 days, Georgia, 1,100 days, Florida, 1,100 days, New York, 1,100 days, Washington, 1,000 days, Oklahoma, 950 days, Pennsylvania, 914 days. That is 10 states, and these aren't small states. These are big states with a lot of population where it will take 3 to 5 years to foreclose on a property. So if you're thinking this crash is going to come in 2021 because all these houses are going into foreclosure and they're going to come on the market, they're not, right? In some states, maybe. So let's go down here and look at the 10 states with the shortest average foreclosure timeline. Virginia, 201 days. It's still longer than 6 months for the shortest state in the country. Montana, 217, Alaska, Mississippi, Oregon, New Hampshire, Arkansas, Wyoming, Minnesota, West Virginia. So we're to the 10th shortest, and it still takes more than a year for the average foreclosure. And guess what? These aren't exactly the most populated states in the country. Montana, Alaska, Oregon, Wyoming, right? There's some population here, but they're not the giant states. And look how long these are still. And these are the shortest foreclosure timelines in the country. So if you think a crash is coming in 2021 because of foreclosures and defaults, it's not, right? Maybe in Virginia or Montana. But most of these states are going to have years before these foreclosures come on the market and you start seeing them affect prices. All right, so we've talked about a lot of different things in this video. Affordability. It's really not that unaffordable to live in houses in the United States compared to other countries. Building supply. There's still too few houses for how many people there are in the US. That's why prices keep going up. Lending guidelines. They're much, much stricter than they were before. They're not crazy. There aren't those crazy loans out there like there were before. And the people who are getting loans, especially investors, are putting much more money down. Foreclosures. Yes, there could be a lot of them, but the government, the banks won't let them all happen at once. And if they do happen, it'll take years and years for them to go through the process. And finally, worst case scenario, if these foreclosures go through, if everything just tons of inventory comes on the market, there are buyers waiting to buy. And not only that, but if these landlords, these investors don't have tenants to pay, they have equity, right? They've had prices going up for years. They had to put 20% down, 25% down. There's a very high number of investors who bought with cash. So they have the ability to sell. They won't just lose them to foreclosure. They can sell them to other investors, these big investors, wholesalers even. People like me who buy houses can swoop in and buy these deals, give them some money before they go to foreclosure. So there just are not any of these factors that were there before that led to the last crash. Now there's a new factor, and that's coronavirus and people not paying rent and high default rates. But again, that does not mean there could be a crash either. Every real estate market will have some foreclosures, some defaults. Now there could be many more than a normal market, but the government, I don't think, will let those defaults all happen at once. Neither will the lenders, neither will these private hedge funds. They'll work to stretch it out, which will keep a crash from happening. And even if lots of properties do come on the market, there'll be investors waiting, small investors, big investors, medium investors, to buy up these properties before prices just plunge like they did in the last crash. So overall, could prices steady out? Yes. Could prices even drop some? Yes. But I do not think they will crash anytime soon. Housing crashes don't happen that often. As we said, there's only been 4 in the entire history of the United States. And if a crash does happen, it's not happening in 2021 because it takes so long for these foreclosures to go through the process, for them to be completed. It could be a few years, 4 or 5 years out before we see a significant drop in prices. Now, I could be wrong. I could be totally wrong. All my analysis could be wrong. But this is me coming from going through the last crash, being an investor, being an agent, and seeing how these processes have worked over the years. The government, the banks, Wall Street do not want a housing market crash, right? It hurts everybody. It hurts you. It hurts me. The only people it really helps are these people just waiting with cash on the sidelines, hoping to swoop in and buy properties when they're really cheap. But that's a pretty small percentage of the population compared to all these big, giant companies who want the economy to do well, who want the people to be happy and not lose their homes to foreclosure. So that is the data I have for my prediction on the housing market crash. Again, who knows what could really happen? No one can actually predict it, but based on the data, that's my best guess. Hope you guys enjoyed it. Please leave comments below. Love it if you hit the like button if you thought this was informative. And we'll have many more videos on our flips. I've got 13 flips going on. My rental properties, I've got 180,000 square feet of rentals, as I said. Other advice videos. So welcome. If you've never seen us before, hopefully you subscribe and find our information valuable. And we'll try to answer some comments below as well. All right, thanks a lot. We'll be back again soon.